So the first thing I'm going to say is, I want to answer the unasked question. Is this guy effing crazy for saying that Bitcoin can go to $40,000 by the end of the year? Because it's an insane statement. And I would not blame everybody in this room to think, this guy's nuts, there's no way this can happen, how can he have any credibility getting in front of this very important group of people here saying that Bitcoin can be $40,000 by the end of the year. I have been writing about cryptocurrency for 2.5 years. I have a Wall Street background. I ran money for 15 years on Wall Street and then ran a hedge fund for 10 years, built a newsletter business, sold it, and then started getting involved in crypto in 2016. Every single year that I've been in this business, I have been called crazy by someone, somewhere. When I first went down to Florida to my publisher's office and said, we gotta start buying Bitcoin, and this small coin called Ethereum. They looked at Ethereum, which had gone from 30 cents to $7 and had $1 billion market cap, and a kid that looked somewhat autistic in their eyes running it, and they said, you're out of your mind. There's no way that we are going to let you write reports to our audience telling them to buy Ethereum and to buy Bitcoin. The narrative of Bitcoin back in 2016 was that Bitcoin was used by pornographers. Bitcoin was used by drug dealers. Bitcoin was used by terrorists. How could I go and tell people to start buying Bitcoin and Ethereum? And I said, either you let me write about this, or I will leave and I will start up my own newsletter business, and I will write about it on my own. They relented. I now write the world's most popular cryptocurrency newsletter. As far as I know, I was the first person in the world to put together a full-blown, legitimate research report on Ethereum at 7, and said within a year it will trade to $360. People thought I was insane, absolutely insane, that I was suggesting that something that had $1 billion market cap, that in everybody's mind shouldn't have had $1 billion market cap, would trade to a $36 billion market cap. At the time, when I interviewed Vitalik, when I looked at the white paper, I said, Ethereum is going to be the operating system for application development for a brand new asset class. And that's exactly what it's become. So the reason why I'm telling you that is that I have a history of making what appear to be outlandish predictions, and a lot of them come true. So what I want to do tonight is talk to you about what's going on in the market right now, what I'm seeing taking place. I want to help give this room a little bit more perspective, which is hard to have perspective when everybody's net worth is going down by double digits every single day. It's difficult to have perspective. I get that, but I'd like to give you some. And then I want to talk to you about what I see happening on a macro level in America among the largest financial institutions in the United States, and the steps that they are taking that I believe will result in an enormous influx of capital into the cryptocurrency markets. So I want to talk about the great financial crisis of 2008 and 2009, because the current market that we are in right now in crypto emotionally feels like the 2008-09 crash. I mean, I remember 2008-09, oh my God, everything was just getting crushed. Every single day you came in, down again, and again. I mean, you're talking about names like American Express, $9.71. Harley Davidson survived the Great Depression, barely survived the Great Financial Crisis, went down to $8. Bank of America down to $2.50. Today, we have a market in crypto where the blue chips of tomorrow are trading for pennies of what they ultimately will be worth. And it's difficult to see because the market's going down every day. And it's the same situation that we had in '08 and '09. But the thing to understand about crypto is, we have a saying in the States, this ain't my first rodeo, right? This is not the first time we've had the hell kicked out of us as an industry or as an asset class. In 2011, when there were no real altcoins to speak of, Bitcoin dropped 94%. In 2013, Bitcoin dropped 70%. In 2014, Bitcoin dropped 85%. And so far, in this pullback, Bitcoin has dropped as much as 71%. I want you to understand that crypto is volatile, yes, but it's resilient. It's resilient. Each and every time the crypto market has collapsed, it has roared higher to all-time new highs. But why will it happen? Why will it happen? I need to buy more Lambos. Nobody can tell you specifically when it will happen. But you've got to rely on the fact that we are so early in this cycle that the sun will shine in this industry and on this asset class once again. The other point I want to make about crypto is that if you are patient, crypto is very forgiving of poor timing. That's what I mean by that. I mean that if you had bought Bitcoin at the peak of its move in 2011, the peak of its move in 2013, and the peak of its move in 2014, the absolute worst timing you could possibly have, from peak to peak to peak to peak, your average overall gain was almost 10x, with the worst timing in the world. So you gotta ask yourself, how many assets do you know of where you can make money over time, even if you bought at the peak of every single move? We have real estate in the United States that 10 years later is still underwater. Is still underwater. The longest you've ever had to wait in this industry in terms of Bitcoin is 2, maybe 2.5 years, which is nothing if you come from the equity markets. So this is a real interesting stat. If you bought at the low, every time Bitcoin just absolutely got pummeled of each of these moves, from 2011 to 2014, you made an average gain of 247x off the bottom. The last time Bitcoin was down this much, you made 55 times your money. But you know what? Maybe this time's different. Maybe it's over. We had our shot, it's done. We should all go home, right? Yeah. Right? So, look, that's the past. And what I'm here tonight to talk to you about is the future as I see it. So, this evening, I'm going to tell you and show you why I think we are in the middle of the greatest, not one of, the greatest wealth building opportunity of our entire lives. Bigger than the biotech boom in the 80s, bigger than the tech boom in the 90s, bigger than any boom anyone alive in this room has ever seen. Enormous wealth is going to be made in this next crypto boom. Before I tell you more about that, I want to share with you a very quick story that I think illustrates where we are in the current cycle. Anybody here ever see the HBO show Deadwood? Yes. Anyone? Okay? Yeah. Okay. So Deadwood is a fictionalized account of what happened during the Dakota Gold Rush in the 1870s. In the 1870s in America, an enormous amount of gold was found in the Dakota Hills, but it was completely unregulated, right? These were unregulated territories that the federal government had no control over. So you had regular folks who got in early, very much like crypto, and they made fortunes. These were not mining magnates or industrialists. They were savvy people, speculators, saw an opportunity, pounced on it, and started to get rich. But what happened to those early prospectors? I'll tell you what happened to them. George Hearst, who was the father of the publishing magnate, William Randolph Hearst. Everyone's here heard of Hearst Publishing, right? Massive company. George Hearst swindled them out of their mining shares. How did he do it? Well, according to rumors, Hearst used murder, intimidation, and most importantly, misinformation to force people to sell their claims. He even purchased newspapers in the town to influence public opinion. But why am I telling you all of that? I'm telling you this because this blueprint of stealing money is old, and we're seeing it play out right now. Okay, so crypto investors will recognize this strategy, right? So I don't know if anybody here knows, but the Polish central bank was busted for spreading disinformation about cryptocurrency. Jamie Dimon goes on TV and says Bitcoin's a fraud, and then we come to find out that JP Morgan and Morgan Stanley are the biggest buyers of Bitcoin on the 24% dip. Goldman Sachs, just a week ago, put out a report saying Bitcoin will never, ever come back. They just spent $400 million buying Poloniex. They just put another $40 million today into a deal. They started up their own crypto trading desk and actually have a head of digital trading products. But Bitcoin's never going to come back. So, like Hearst, they're spreading a lot of rumors. One little quick point about Hearst. Hearst was successful for buying the Homestake mining shares. Homestake mining, he bought it for $70,000 using these scare tactics. Homestake mining became the richest gold mine in American history. From 1879 to 2002, the mine produced $55 billion in gold and silver. And got it for 70 grand. That's happening right now in this space. And I know it's hard to see that, right? I know it's hard to see that. But that's happening right now in this space. I'm here to tell you the crypto is growing up, and it's attracting the attention of some of the greediest men and women in the world. Intercontinental Exchange owns the New York Stock Exchange. The guys and girls at, does not work?
We can hear you like that.
Okay. The men and women at ICE are some of the smartest money people in the world. They own 23 different exchanges. They own 7 global central clearing houses. They are getting into cryptocurrency. Now, ICE makes $2.5 billion a year on $5.5 billion in revenue. They are radically profitable. Why would they imperil their regulated business to get their hands dirty with crypto? Is it to make 10 or 20 million bucks? Even $500 million, is that enough? I don't think so. To imperil a $2.5 billion profit business. I will tell you why ICE is coming into this space. One word: finance. Binance, a company barely a year old, will net $1 billion this year. Deutsche Bank has been in business for 148 years, has 100,000 people, and Binance is more profitable than them. That's crazy. Like, that's crazy. What's so crazy about that is that Binance has managed this level of profit while playing in a market that is tiny. It's tiny. Oh, we hit 200 billion, we hit 400 billion, we hit 800 billion, woo! Guys, it's nothing. In global finance, it's nothing. It's no money. So, the fact that Binance has generated this much profit with so little global participation is a massive opportunity that the banks see. Let me explain. 80% of American households have exposure to the stock market, but only 2% of them have exposure to crypto. 500 million people worldwide own stocks. Reliable global crypto penetration numbers are very difficult to come by, so the only estimates I have are unreliable. They range in 30 to 35 million people. So that leaves approximately 465 million more people that can come into cryptocurrency. Now, I will tell you, it is dangerously naive to imagine that those 465 million people are going to come in without the help of the global financial system. I don't care how good the marketers in this room are, you are not going to convince 465 million traditional investment buyers to buy cryptocurrency. But you know who will? Wall Street. Wall Street will. And they'll do it because they'll make hundreds of billions of dollars in profits. And that is the opportunity that traditional finance now sees. That is the reason why they are lining up their chessboard pieces, positioning themselves to get involved in this tiny market. This is the vision that is guiding some of the smartest and largest pools of American capital. You think we're in an ICO gold rush? You're thinking too small. I don't care how wealthy or powerful you think you are. All of us are bit players in a battle between the world's largest banks and financial firms. And they will want to dominate the future of crypto trading and crypto issuance. We are the small-time miners of Dakota mining. Sure, some people here are fabulously wealthy, but your wealth pales in comparison to the titans of business that are now wading into this space. And you need to know that. The bet being made right now is that some of the smartest money on Wall Street can funnel the world's stock investors into crypto and divert hundreds of billions in fees into their hands. This is the playbook that they are looking at, going for, the dream that they are pursuing. They don't care about decentralization. They don't care about self-custody of assets. I want everybody to close their eyes just for a second. Just for a second, humor me. I want you to imagine that. You too, Olga, I'm looking at you. I want you to imagine a time in your life when you were so greedy it made you blush. Think about that for a moment. You were so greedy. It could have been for life, love, money, whatever.
It happens every day.
Now, open your eyes. Wall Street is 10 times greedier than you are in your greediest moments. Understand that. Understand the level of greed, power, and money that is aligning itself to come into cryptocurrency. Why? 465 million people don't own crypto yet. 465 million. Now, this is why I have come to this conclusion. ICE, the Intercontinental Exchange, for the last 14 months has been working on something called the BACKT platform, B-A-K-K-T. This is something they kept super secret and now have finally started to bring it out into the public. The crypto industry does not understand how much of a game changer BACKT is going to be for crypto. If it did, we wouldn't be crashing the way that we're crashing right now. And the reason why I think many crypto participants do not understand the importance of the BACKT news is that very few crypto participants have a Wall Street background. There are some, but very few. What BACKT will do is it will integrate their crypto trading platform into the US futures market and all their clearing houses. For the first time, there will be a direct link. That's the Russian way. For the first time, there will be a direct link between cryptocurrency and the global financial infrastructure. I know, Satoshi's probably rolling over in his grave right now thinking about this. But this is what happens. Large forces co-opt great ideas. It happened with the internet, and it's happening now with cryptocurrency trading. Think how far we've come in 2 years. 2 years ago, if you were playing around with Bitcoin, you'd have your bank accounts taken away from you, you'd be considered a terrible person. And now, ICE, the second largest operator of exchanges in the world, says, you know what? We're going to act as a custodian. You want to trade on this exchange? No problem. We'll help you do it. You want to have prime brokerage services? We'll provide those for you. So BACT is creating a platform that institutional investors such as pension funds, endowments, and insurance companies can now use as a conduit to get access to cryptocurrency. Did you really think US pension funds were going to use Binance or Gemini or even Coinbase? No way. No way. If you're sitting on a $4 million a year cushy job running $20 billion, are you going to trust some guy in China that you don't know who's on a different plane every goddamn day? It's not going to happen. But will you trust ICE? The same guys that operate the New York Stock Exchange? Of course you will. Now, why does American money have to come into cryptocurrency? It has to come into cryptocurrency because the average American pension fund is severely underfunded. They have not had enough up years in order to fund their pension fund liabilities. So they have to chase alpha. If you look at the fund flows in America right now for pension funds, you will see their allocation to alternative investments is at a 20-year high. Why? Because they need higher returns. Cryptocurrency gives them the ability to have higher returns in an asset that is completely non-correlated to any other asset they own. It is a dream come true for an institutional wealth manager. Problem is, they haven't had a credible way to buy it. Now through ICE, they will. And they will buy. And they will buy in size like you can't imagine. The CEO of BACT has been very clear in her intentions, and I want to read what she said. BACT is designed to serve as a scalable on-ramp for institutional, merchant, and consumer participation in digital assets by promoting greater efficiency, security, and utility. We are collaborating to build an open platform that helps unlock the transformative potential of digital assets across global markets and commerce. She's revealing her whole game plan, right? She's revealing her whole game plan. She wants BACT to be the place where institutions buy, sell, trade, and custody their digital assets. And you know what? She's going to succeed. ICE is an incredibly well-run organization by brilliant, brilliant people. And BACT is going to change the face of this whole industry. I'm not here to recommend coins or stocks, but I will tell you, ICE is a publicly traded stock on the New York Stock Exchange. And in my opinion, BACT is the best positioned traditional finance firm to earn billions of fees from crypto. And my bet, and something I will say here right now, is that I think the profits from the BACT division will dwarf the profits from the traditional ICE exchange operation division. Institutions, again, will be able to buy, sell, and trade and custody all of their digital assets in an operator that already processes trillions of dollars worth of transactions. If you end up using BACT and you are an institution, you're not going to lose your job if something goes wrong. It's backed by ICE. The guys behind the NYSE. Nobody gets fired for that. You take a shot at Coinbase and something happens at Coinbase, guess what? You're losing your $4 million a year job, and Johnny and Jenny got to go to public school. Sorry.
Maybe go ahead.
Right, exactly. So the point I want to make here is that I cannot overemphasize how important the backed news is. And I think the market is really not understanding how transformational it is. In my opinion, ICE and backed will transform the entire crypto landscape from what is right now, frankly, a tiny financial backwater into a globally connected, thriving asset class where the largest public pools of capital in the world will come to play. I want to comment here about the ETF, right? The ETF didn't happen, and everybody was crying to their mommy, oh, the SEC, and everybody's just crying, and selling their coins. We will have a Bitcoin ETF, and it will probably happen this year. And the reason why we'll have a Bitcoin ETF is for the same reason why ICE is going to attract a ton of institutional money. This ETF is backed by the CBOE and their rule change, and they've provided insurance for this project. So if somebody from the SEC approves this particular ETF, and it's backed by CBOE, and it's backed by insurance, and it doesn't work, no one's going to lose their job. No one's going to lose their job, right? So what the CBOE does is it basically, call it CYA, cover your ass. Everybody's ass gets covered. Now, if you read the filing, which I have, the SEC can punt on this all the way until March of 2019. I never expected this ETF to get approved in August. I do believe it will get approved this year, but they have the right to push it out to Q1. The key takeaway, though, is, and the key thing you've got to ask yourself is, will we get an ETF approval? Not when will we get, because when will we get, unless we have insider information, there's no way we know for sure when. The bigger and most important question is, will we get an ETF? And I will tell you unequivocally, we will get an ETF, and it will be wildly bullish for this space. But this space is going to be so much bigger than just a single ETF. So the biggest question I get is, when is this bright future going to happen, Teeka? When are the rainbows going to come out again? When are the unicorns going to be dancing in the meadows? And when can I buy my 20 Lambos? Right? These are the questions we all get. I've managed money over 3 different decades, and what I've learned is that as investors, we must focus on what is knowable, right? We can't know the exact date the market wakes up to this news and starts pricing it in, right? And I claim to you today that all we need to know in order to make a fortune in this market is that these events will take place. The preponderance of evidence is what we have to follow. The exact date, no one can give you the exact date, okay? I don't know the exact date when the ETF is going to get approved. But the fact that it will get approved, the fact that by November, the backed platform will be up and running, is all we need to know to make a fortune from the transformation that is about to take place in the crypto space, from a tiny, unregulated market into a massive, multi-trillion-dollar, really bank-run alternative asset class. I ask you not to trust in me and my view of events, but rather I ask you to trust in the unadulterated greed of the global financial system. That's a bet you can never lose. They will turn on their well-oiled lobbying and marketing machines and march the 465 million of the world's investors not yet into crypto assets. And they will make billions and billions of dollars in fees doing it. Now, my best estimate, this is where I'm going to peer into my crystal ball. My best estimate is that much of this infrastructure will be in place before year end. And I believe that the first Bitcoin ETF will be in place before year end. And I think the combination of a Bitcoin ETF, the combination of Bakkt being up and running, will push Bitcoin to $40,000 by year end. Now, is it crazy for me to say that? Maybe. July 12th of last year, I was in London. Bitcoin was trading at $2,500, and the CFTC had just announced they had given a small company called LedgerX the ability to trade futures. We didn't know when the futures were going to trade. I made a bunch of phone calls to a bunch of folks in my network. They suggested by the end of the year. I got in front of my little video camera, and I made a video, and I said, Bitcoin will at least 4x from here. 2,500 to 10 grand. Guess what happened? 7 days later, Bitcoin fell 30%. Right? This is the craziness of the market. This is the craziness of the market. But by year end, of course, we had hit close to $20,000 on Bitcoin. Right? So the vagaries of the market are beyond anybody's ability to really understand. To me, when I saw Bitcoin drop 30% after that news came out, I said, this market's crazy. This market, the people here don't understand how important this news is. And I am here today in Moscow for only 13 hours to tell you that this market is crazy. This market does not understand what's about to happen by the end of this year and how the face of this entire industry is about to be remade by some of the largest pools of capital in the world. Thank you.
I want to ask a question slightly different angle. You never mentioned your opinion of what you think this will do for the whole industry. Whether do you think the whole coming of the ETF and the ICE and everything else that you said, will that actually be good for the development of the industry, or whether it will be bad in the future, coming year or so, 2 years?
It's a great question. It will be very good for Bitcoin. It will be very good for Ethereum. It will be very good for the most liquid coins. For the shit coins, it'll be horrible. It'll be horrible. It will be horrible. Now, I will tell you this, again, peering into my crystal ball, is that you will have this initial broad-based euphoria take place when Bakkt comes online and when the ETF comes online, and everything will run. And when that happens, you got to sell your shitcoins. Okay? You got to sell into that liquidity, because this market will become more discerning. You can't just put together 5 pages of a white paper and say, I'm going to stick a token on some bullshit that has absolutely no need for a token. Those days are dying. Right? They're dying. Institutional money is not going to get behind that. When that institutional money first comes in, they're going to go into the biggest, most liquid names, and then you will see a trickle-down effect into the second tier and then the third tier names. But those 5th, 6th, and 7th tier names, they're dead. So you got maybe one more big run coming for those crappy names, and when it happens, take your profits. Yes, sir.
It's okay, I can ask like that. Okay. Okay, sure. Right. So my question is going to be, first of all, thank you for the lecture. It's very nice. My question is going to be, you worked on Wall Street, right?
Yeah.
So did I. And it's just, you believe that these tools are necessary for Wall Street investors to invest, but you and I both know that all the smart money is made usually early. And right now, nothing is stopping investment banks from investing early in cryptocurrencies. What do you think? Why do you think these tools that everybody's waiting for, the ETFs, the special purpose funds, all of these things are going to matter when the decision makers don't like the product? And a lot of these issues, and just personally from my experience, they're just not all of them are fond of the product. So my question is it a little bit naive to expect certain tools to change the trajectory when a lot of the kids are investing, and it just creates this amazing roller coaster that some people like and some people don't like. Maybe there is a way of thinking that this is just the type of business this is for speculators to make money. Why do you think that investors from Wall Street are going to change the dynamics of what makes people like me invest, for example, the volatility? Thank you.
It's a great question. In 2005, I saw Wall Street take one of the most crazy, volatile areas of the financial markets, commodities, and bring it to the general public through ETFs, and mutual funds. I had never in my life thought that I would see such a widespread adoption of product in a market that was so volatile. So what I will say is that once Wall Street can smell fees, that they will put their marketing machine to work in order to convince us, or the general public, that it's a good idea to go buy them. And I think they'll use the same argument with crypto that they used with commodities.
Can I have a little follow-up?
Yes.
Just a little follow-up. Wouldn't it remove anonymity? And wouldn't it remove all these things that makes it the thing to do, to invest in? I mean, or as you know, the American regulatory environment, right? With all the necessary tools and the KYCs and everything that an American investor needs. When that comes to the market, wouldn't it remove everybody else who likes this idea that they can have $10 million, put it on a flash card, and travel? Wouldn't that remove it and bring in only the grandmas that are going to invest there and make that market stale and remove all of us, all the speculators in this group are going to leave?
Yes, the market is going to change. It's going to grow and mature and become something completely different than what the people who originally designed this market to be. Does it mean that there won't be certain pockets of, let's call it, resistance? Yeah, of course there will. But the cryptocurrency market is going to get co-opted by big banks and financial firms because of the money. Because of the money. Because of Binance being public about how much money they've made. That is just whetting their appetite, right?
Fees-based.
Fees. You know how easy it is for them to say, oh, this is a non-correlated asset to stocks, guys. You need to have a 5% allocation to this in your entire portfolio. And guess what? We'll manage it for you. It's another fee-generating event for Wall Street.
But you don't think it's not going to be Bitcoin, it's going to be coin they make, and then Wall Street coin, doesn't matter, and that's what they're going to work with. They're going to work with Bitcoin. They don't need to work with that.
The question is, I guess the statement is, well, they're not going to work with Bitcoin, they're going to create their own coin. My crystal ball doesn't see that far in the future. I think for now, it's Bitcoin, it's Ethereum, it's other bigger names in the space. What you're talking about, maybe that's year 4, year 5, but for now, I think this is where we're going to see the money come into.
Yeah, they will use something that's easy to sell because everybody already cares about Bitcoin.
Correct. Bitcoin has the brand name recognition. Yes, sir.
What I can say about the future of Teeka?
I have no comment.
Thank you for the talk, very inspiring to hear that these days. And my question is, what do you think about security tokens? Is it the next big thing in crypto?
So the question is about security tokens. Is it the next big thing in crypto? Look, personally speaking, I hate the idea of security tokens and utility tokens and taking these old rules and wrapping them around something that really is a completely new and different asset class. But I would be naive to ignore the position that regulators are taking. Regulators, at least in the United States, are taking the position that virtually everything is a security token and comes under securities laws, which is why I believe it's Wall Street that will end up becoming the biggest beneficiary of these rules. Now, that said, I don't think this is going to be a situation where all innovation gets killed and you can't trade anything else. Me personally, I have high hopes for decentralized exchanges. that can scale, that can do peer-to-peer trading, that can really disintermediate even the finances of the world, right? Like we have centralized trading right now, which I think is crazy. It's completely contrary to what Satoshi was all about. So my hope is that we do see decentralized exchanges. However, if we are talking about not a niche market, but a broad-based global market, then it's going to be security tokens, it's going to be financial products, it's going to be Wall Street, it's going to be big finance, putting their marketing and lobbying machine to work. Yes, sir.
So according to the comparison that you had there, is it right to say that by the end of the year it's going to be 40, and by the middle of the next year it's going to drop to 20, and you're going to feel stressed as well?
Yeah, again, I have my crystal ball has limited range, but I believe we'll see 40K this year. What happens next year? Well, maybe I'll get invited next year and I'll tell you that.
You survived that.
Yeah,
If it
indeed.
doesn't drop 90%, we don't come to you.
Yes.
Thank you very much for the lecture. How did you come up to the 40K number?
It's history.
Yeah, so so 40K is I don't have the exact research in front of me. We did it based on what we thought was going to be usage and what we thought the amount of uptake of people on the ETF. But I don't have the exact numbers. Ami, if you want to give me your email, I'd be more than happy to get my guys to send that over to you. But that's the number we came up with. Anybody else? Do I get to drink some tea now? Take a break and hang out?
What do you think of the first Ethereum?
I think Ethereum is one of the most undervalued projects in the world right now. And what's beating up Ethereum is that all the people that raised money in their ICO, they raised $20 million at $800, and now it's like $5 or $6 million, and they're freaking out. Oh my God, I might have to get a real job. Holy crap, I gotta get some money to Ethereum and get some USD. So I think that's what's happening right now. People are freaking out. It's almost akin to margin selling that you see in the stock market. Of course, it's not margin, but you have the fear of all these entrepreneurs running out of money, and they're just all running for the exits. And there's no telling how long or how much more violence is going to occur on the Ethereum price. But I think Ethereum is cheap. I think Ethereum is going to be with us for a very long time, and ultimately will be worth hundreds and hundreds and hundreds of billions of dollars. Yes, sir.
I do hope my question will not be the last one, because it's a bit naive, and I'll be a devil's advocate at this point. But you mentioned in the early beginning of your brilliant speech, thank you so much, by the way, that there used to be, or that some significant criminal component, which is inconsistent with the notion of institutional money. Don't you think that this is still sort of in place, and how those two things, like the optimism you are breathing into ourselves, and that component, how those two things go together now?
It's a great question. I speak to a lot of different people throughout the United States and the different regulatory departments, and I talk to a lot of prosecutors. And I will tell you, if you are using Bitcoin or any public blockchain to commit crime, you are dumber than two rocks in a sock knocked together, because it's stupid. It's stupid. You get tied back to one transaction and they can untie every goddamn thing you've done. When I speak to prosecutors about this, they say, Teeka, we love it when people use Bitcoin to commit crime. It's so easy to pin everything on them. Cash is still the ultimate weapon for the bad guy in this world, not cryptocurrency. Okay, if people are buying and selling $50 million worth of guns, you think some guy in Kabul is going to take a bash? Right? No. He wants greenbacks. He wants dollars. That's what he wants. So I think that's an old narrative that gets, every now and again, if somebody wants to throw a spanner in the works, they'll bring that out. but more and more people are realizing that all technology can be used for something negative, but that it's actually a pretty bad idea to use specifically Bitcoin to try to break the law. Did that answer your question?
Maybe looks like it
Yes, go ahead.
Thank you very much. My name is Rob. Thank you for your speech. I have another question. So you told us a lot of new information about Wall Street, what's happening in the United States. It's very interesting. But my question is, maybe you know, like, I'm quite interested in South Korean phenomenon. Like, they're very forward-thinking now. We have quite a lot of friends there. For example, we have friends in Nexon, and as you know, like Nexon, they acquired Corbic Exchange recently, and there are 2 more deals to be announced quite soon. So it's also like talking about some adoption from high institutionals. What are your thoughts about like next countries that would be like second South Korea, maybe like Philippines, India, or Russia? Actually, I don't really believe in Russia will have something like that.
Yeah, I think Southeast Asia is interesting. I love what's happening in Japan. I don't know if you know, but Nomura Securities, $100 billion a traditional financial firm, is setting up a custodian, a separate a consortium to provide custodial services to Asian financial companies, which I think is incredibly bullish. So again, more and more around the world, I see these institutions coming together. In terms of what other areas I think could have a big impact in the future, I think Africa, I think is an area. But for me, like if we're looking at the alphabet, right, A, B, C, all the way to Z, that's more like a back half of the alphabet type of issue that I'll look at later. Right now, I think we've got some low-hanging fruit on the tree right in front of us, which is American institutional adoption of crypto assets. All right, thank you very much.